What is it? Petty cash is a small amount of cash that is kept on the company's premises to pay for minor cash needs. It is kept on hand and is used to meet small miscellaneous payments, such as entertainment expenses and stationery costs. How it works. The payments are handled by a system whereby an amount of float is fixed. This is the maximum amount of cash that can be held at any time. Once the level runs low, the cash account is injected with cash by a check. The amount injected is equal to the amount paid through petty cash from the last reimbursement, ultimately reverting back to the level of the float. Payments are posted into the cash ledger and general ledger. Procedure. The correct petty cash procedure involves a summary of all disbursements made and issuing cash back for that amount. The procedure involves 1. Establishing the fund. Writing a check for the amount of the fund, where an accounting staff member receives and approves the form and sends it to the accounts payable staff. A journal is then made to record this establishment. 2. Making payments from the fund. The account payable staff creates a check of the amount needed to fund the petty cash to its stated limit. Payments usually are made in 2 ways. Cash can be taken from the fund to make payments, or employees can seek reimbursement from the fund. The accounts payable staff forwards the petty cash reconciliation to the general ledger account. 3. Replenishing the funds. As the funds decrease, they must be replenished. The cashier gives the cash to the petty cash custodian, who includes it in the petty cash funds, and updates the running total of cash on hand. To get the fund back to the original balance, receipts are used as documentation. Controls. Since cash is liquid, it is important to have strong controls to avoid any misuse of petty funds. For example, petty cash must be kept in a secure place. The cashier must be responsible to keep invoices for the use of cash, and the amount of float should not be set too high. Cash over and short. Although the amount of cash replenished should always be equal to the original balance, this is not always the case, which can be for many reasons such as not receiving all receipts. Cash over and short is the account that allows for either a debit or credit. A debit balance means an increase in expenses, while a credit balance means a decrease in expenses. Here is an example.